While a lot of average Nigerians is making money in the Nigerian stock market, a lot of people are jumping into the Nigerian stock market without having proper knowledge of how it works. Investing is one of the most powerful tools for building long-term wealth and financial independence, but it comes with a lot of risk. Whether you are new to investing or maybe you've been trading for a very long time in the stock market, you would attest that one wrong mistake can cost you months or even years of progress. In this video, I am breaking down the most common investment mistake that is quietly destroying investment so that what is supposed to work for you won't work against you. Hi guys, my name is Phoebe. On this channel, I talk about investing, I talk about business, I talk about mindset and real life lesson. Please like this video and subscribe to this channel. If this is your thing, let's go on this journey together. If your goal is to invest smarter, protect your capital, and build real financial freedom, stay with me to the end of this video. So what are those mistakes that has made a lot of investors, new timers in the stock market to lose their money over time? Number one is investing without a specific goal. A lot of people just jump into the stock market without a specific goal. Now, they just want to make money. So maybe they heard it from someone and they just jump in without a goal. Now, if you enter the market without a specific goal, you might end up buying the wrong stocks. You should be able to have a plan on ground before investing into the stock market or any other form of investment. What is your plan? Is your plan for retirement, or are you investing because you want to create wealth? Are you investing because you want cash flow? Are you investing because you want capital gain? If you are able to ask yourself this question, then you should be able to know where to channel your money into the stock market, because not every stock is supposed to be in your portfolio. Right? The decisions and the goals you have is what determines how your portfolio looks like. Are you investing because you want dividends? Are you investing because you want to build wealth, you want to travel around the world, you want to thrive? Are you investing because you want to preserve your money, you want to preserve your wealth? Those are the things that you need to ask yourself before putting your money into the stock market. Number two mistakes is buying cheap stocks. Now, a lot of people believe that when they buy cheap stocks, over time is going to give them 10 times of what they invested. Of which, if you have done a proper fundamental analysis on any of the cheap or penny stocks you are buying, it's a good one. But sometimes penny stock doesn't really look like what it is. You might end up buying something that you will lose your money over time. And if you end up buying a wrong cheap stock or penny stock, you will lose money. And sometimes penny stocks are illiquid. I've seen people who bought stocks, they waited for 1 year, some waited for 6 months, some even waited forever, and they couldn't sell these stocks. Just because every other persons are buying it, they thought it's cheap, so they will have the bigger returns. And one of the most striking things is that if you check some person's portfolio, you'll just be seeing everything cheap, 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 and penny penny. That is not how to build a solid portfolio. You can't be buying cheap stocks and expecting a big dividend. Okay, let's say you bought a penny stock that pays dividends. It won't give you a very good dividend because it's a penny stock. Penny stocks pay penny dividends. So having all penny stocks in your portfolio is not a good one. So this is one of the mistakes that new investors make. The truth is, penny stock, a good and well-established company with a penny stock can give you 10x of your investment, but not every penny stock. So you need to do your fundamental analysis. Number three mistakes is just accumulating a particular sector in the stock market. or because you hear that oil and gas is doing well, which it has returned some good amount of percentage for just few weeks that we've been in this new year, and you just put all of your money in oil and gas stocks, or maybe in banking stocks, or maybe in agricultural stocks. You are not building an healthy portfolio. Your portfolio is supposed to be built in a way that you diversify across different sectors. You are able to diversify across agricultural, across industrial, commodity, manufacturing, energy. That is how to build solid portfolio. I hope that by the end of this video, you will go check your portfolio and restructure it again if that is the kind of portfolio you have. And this also help you to minimize risk. Because if you have a particular stock in a particular sector, what if the federal government or maybe the CBN just gave a decree that had those kind of sectors? You might just end up losing everything because all of your stocks are in one sectors. Oh, the banking sectors is going well, so let me buy from the banking sectors. Only you bought UBA, you bought Zenny Bank, you bought Wema Bank, you bought Access Holding. That's not the right way to build an healthy portfolio. Number 4, just buying dividend stocks. Now, it is good that you invest in dividend stocks, but your portfolio cannot just rely on just dividend stocks. Not all stocks are good for dividends. Even before you should even invest in dividend stock, you should be able to look at the stock if they have a very good track record when it comes to paying of dividends. All of your stocks shouldn't be on dividends. You should be able to have some blue chip stocks. You should be able to have some defensive stocks, some growth stocks, and you should be able to have a little bit of penny stocks and dividend stocks. That is how to build a good portfolio. So those accumulating dividend paying stocks is not the right way. One of the good dividend paying stocks I know it's a NDIF. They have a very good track. Is it NDIF also? I think I've forgotten. I'm just gonna put the name. They have a very good track record when paying dividends. You can't be investing in a dividend that pays, let's say, 1 naira or 2 naira. You might not really make much. So number 5 is trend, just following trend. This is what we call hype over fundamentals. Everyone is talking about it, so let me buy. And you've forgotten that whenever everyone is talking about a particular stock, it might be saturated, which means you came too late. You came too late just buying, trendy stocks. One influencer came online and said he bought these stocks and he made millions of naira. Everyone goes into the stock market and start buying the same stock. You have arrived too late. And sometimes these stocks are saturated. You have to do proper fundamental analysis before buying any trendy stocks or any stock at all. So the goal of investing is to make your money work for you and not to lose money. And even if you want to lose money, it shouldn't be much, should be little. Do not invest because every other person is saying it. And even if they say that the stock is good, do your own analysis. It is going to save you like years of pain. Speaking from someone who has experienced a lot of losses before getting it right. The last but not the least is falling in love with a particular stock. I think this is one of the most mistakes so far. MTN has been one of the best stocks so far that has been doing well since last year till date. And let you fall in love with it and you held on to it. And even when this thing is losing value, you still held on to it because you felt it will come up again. Meanwhile, every other investors have left you. So you are now holding a stock that no longer have value. It is good that you love a company, but loving a stock to an extent that you're seeing that everything about the stock is showing losses, but you still held on to the stock because you felt it's going to do well or do much better. Before you know it, you lose all your money. Falling in love with a particular stock is one of those mistakes that can make you to actually lose money. Now, this is it. The goal is not to love any stocks. You are here to make money. So do your analysis, listen to news, know, join communities that gives you the current information about stock so that when every other persons are running from the stock, you should also run from it. That is the best way to build wealth in the capital markets. I hope you've learned something in this video. The goal is to make our money work for us and not to lose money. Please like this video, share and subscribe to this channel, and please let's talk in the comment section. See you in my next one.